And we have a riveting lineup for you today, so let's dive right into it. A snapshot of what's making waves in the news today is the first story. We'll be looking into the ton of cotton increase by 25%, whereby the Eswatini Cotton Board has announced a 25% increase in the cost of ton of cotton this year. Another story speaks to foot and mouth causes shortage of dairy brands from South Africa. A foot and mouth disease outbreak in South Africa is causing a shortage of some dairy product brands here in Eswatini. On the international front, we want to look into the Democratic Party, which praises Biden's sacrifice of stepping down. Democratic leaders in the U.S. are commending President Biden for his decision to step down from the 2024 presidential race. But that's not all. Later on the show, we will have an in-depth conversation with economist Sanele Sibia. We do want to explore the immediate market reaction to President Biden's resignation announcement, the policy uncertainties that come with the leadership change, as well as the broader economic implications, both at home as well as abroad. We'll also touch on how specific sectors might be affected, international investor sentiment, and strategies to navigate market volatility, as well as uncertainty. And then, to keep you fully informed, per usual, Sanela will join us again for the last segment where we're going to decode today's financial indices. So stay tuned. For now, let's kick everything off by looking at business news. All right, we'll kick everything off by looking at the leading stories today when it comes to financial markets as well as business news. In our first story, the Eswatini Cotton Board has increased the cost of a single ton of cotton by 25% this year. The Chief Executive Officer, Dr. Daniel Khumalo, says this is their way of ensuring that farming of cotton continues to grow in the country.
The cotton industry has about 1,200 farmers, and the Chief Executive Officer of Eswatini Cotton Board, Dr. Daniel Khumalo, says they are still open to have more farmers. He says as a result, they have increased the money they use to buy a ton of cotton from farmers.
One of the factors that we have observed so far is that our farmers were not very happy with the prices we were offering in the past. And so one of the strategies to encourage cotton farmers to come back to cotton production, which the current board has executed, is that we want to increase the cotton prices from where they were in the previous years to better cotton prices. With the increase in the cost of production, we found that most of the farmers are not very happy, and as a result, they are even withdrawing from the cotton industry. So this year, in an effort to try and mitigate that, we have already increased the cotton price from 6,500 per ton, which was a price for last year, to 7,500 this year. We are also looking, that is to say the least, this is about 25% increase in cotton price, which means the difference between cotton price for last year and this year is almost 25%. We are looking forward to also an increasing the price next year, depending on how much effort the farmers will put. The more cotton they give to us, the more price, the better we are in a position to increase the prices, because ginning costs are usually impacting on us if the crop volumes are very small.
He has also highlighted other initiatives they are doing to ensure the cotton industry continues to grow.
We have introduced a number of technologies which makes working in the field to be simpler. That's the introduction of the GMO, the introduction of Roundup Ready cotton, the introduction of herbicide ready cotton. We are also proud of ourselves in the way we have managed the farmers in terms of paying them in time. Where recently we've just bought a combine harvester, which is an incentive to all those who want to embark on cotton production in the near future.
According to the Chief Executive Officer, Eswatini Cotton Board exports about 12 to 16 million emalangeni every season, depending on the total production. For Market View, Nelson Dlangamandla, Vuminko Sinzinisa Mbabane.
Eswatini is experiencing shortage of some dairy product brands from South Africa as that country continues to battle the foot and mouth disease, which is affecting cloven-hooved animals, including cattle. Director of Veterinary Services, Dr. Xolani Dlamini, says this is expected to continue until the situation normalizes in South Africa.
The foot and mouth disease was detected in South Africa in the year 2019. In June this year, the Department of Agriculture, Land Reform and Rural Development in that country called on livestock farmers and owners in all provinces to limit the movement of cloven-hooved animals amid confirmed cases in some of the provinces. The Director of Veterinary Services locally, Dr. Xolani Dlamini, says the outbreak of the disease in South Africa will disturb the import of some products.
The situation is that, unfortunately, where our biggest trading partner, South Africa, has an outbreak of foot and mouth that is still ongoing, and recently has actually affected the Eastern Cape, where we're getting most of our milk. So it means we may not be for some time, whilst they sort that outbreak that side, we may not be able to get the brands that maybe we're getting before. But we are working as a ministry together with the report to just make sure that at least we have some milk in the country, even if it is not the preferred brands by consumers. It is important, it is extremely important that we prevent this disease from coming into this country. I mean, the evidence is there. Look at what it is doing to South Africa and what it can do to us.
The director says government continues to be on high alert for the disease.
The biggest effect or the biggest negative with foot and mouth is that it is a complete trade barrier. Once you have foot and mouth in the country, you will not be able to trade with anyone. So, which means all the industries that deal in beef, in pork, maybe in goats and everything like that, that in terms of trade, they would be standstill. Number two, the other issue, which is very important, is that it is easy to introduce the disease, and once it is introduced, it is easy to spread. It just runs wide like flu, and that is why South Africa is struggling. And all countries which experience foot and mouth actually struggle to eliminate it. So I think it is the best example of a disease that fits in the prevention is better than cure category.
Dr. Xolani implores all Emaswati not to import cloven-hooved animals to the country illegally, stating that if Eswatini can have the disease, it could have a detrimental effect on the economy. For Market View, Nelson Ndangamandla, Vuminkosi Nzinisa, Mbabane.
And from the international front, as soon as American President Joe Biden announced his withdrawal from the 2024 presidential race for the White House, prominent figures in the Democratic Party praised the American president's sacrifice for his country, as well as they lauded him for his legacy.
His decision to withdraw from the US presidential race has been hailed by a series of high-profile Democrats. Following Joe Biden's announcement, prominent figures including Barack Obama, Nancy Pelosi, and Chuck Schumer commended his record in office. Also among them was Democratic Senator Richard Blumenthal.
President Biden has been one of the greatest, most courageous, and consequential presidents of American history. Let's be very clear. This decision was selfless and strong. He put the country first, which is something Donald Trump has never done.
Vice President Kamala Harris described Biden's decision to withdraw as a selfless and patriotic act, adding that she was honored to have Biden's endorsement to be the new Democratic nominee. Many Democrats have been quick to back her.
I think Kamala Harris, as our Democratic presidential nominee, is going to bring an X factor, a magical factor, to this race that's going to galvanize voters all across the country who care about a woman's right to choose, who care about taking on the NRA, who care about equity within our society.
Donald Trump, meanwhile, said he believes Harris will be easier to beat than Biden if she is officially nominated. Following Biden's announcement, congressional Republicans have argued that he should resign the office now.
Okay, we further extend on Biden's sacrifice of stepping down from the presidential election after the break and how really it fits into the financial world.
sabathandi ukuthi njengaloku sivile sive sikhulume
Welcome back and thank you for staying with us. Let's delve into the potential impacts of President Biden's resignation on global financial markets. This unexpected development has sent shockwaves through Wall Street and beyond, prompting questions about economic stability, policy continuity, as well as investor sentiment. Now, to shed light on these matters, let's engage now with Sanele Sibiya, our economist with expertise in macroeconomic trends and financial markets. What does this resignation mean for the economy and the markets moving forward? Mr. Sibiya, a very good afternoon to you. Welcome to the program. The immediate market reaction, we're just looking at the story, of the Democratic Party lauding him for what they call selfless, as he steps down. How have the financial markets responded to President Biden's resignation announcement, and maybe what factors are influencing these reactions?
Good afternoon, Mr. Numalo, and good afternoon to the viewers. So what we are seeing coming out of the markets is just a couple of juxtaposed views. So what we are looking at when you look at the futures in the US, the Nasdaq futures, or the IJE futures, they seem to be inching up higher today in response to those news because, they broke yesterday and then now the markets haven't opened. But all you can look at is just the futures. But the futures seem to be taking this in positive light, purely because, President Trump was a president for business, businesses did like him. And if you saw people like Elon Musk coming out in the open to say, we are endorsing President Trump for the election. So that's why we're seeing Wall Street really just responding to. And we've seen even quite a number of stocks also inching up, more especially Trump-linked stocks have actually also inched up a bit today in response to those news. And purely because, if you recollect, during his term, President Trump met with your Harleys, met, the Harley Davidson makers, and met with quite a number of business people, really just to really understand what the business environment was and where it is actually going. So markets are somehow moving to that. But if you look across the different regions, we can see that there's mixed reactions to that. We can see that, Asia has actually taken a knock out of that purely because of the huge war between, the trade war that might most likely come back during Trump term. Not that it actually dissipated, it was there, but it was quite better under Biden. It wasn't as worse as one would have expected, even though he kept those tariffs that were left by President Trump without a change. And then that's what we are seeing there. Europe, again, still not very much phased because, it's still going to be a very interesting 2 weeks to see who the Democrats are going to put as their presumptive candidate, whether they're going to rally behind Kamala Harris or they're going to come up with somebody new. So that remains to be seen. So markets are also pricing that in to see if whomsoever they put in place will actually have a footing against President Trump.
It's quite interesting indeed, and I mean, we are expecting Elon Musk to react the way that he's reacting, given the types of businesses that he owns. But I want us to get into policy uncertainty as well, because we are seeing that, obviously with the change of leadership, there are primary concerns regarding continuity and economic policies, especially, in areas such as fiscal stimulus and regulatory frameworks. How would you chime in there?
So there is two things to look at on that front, Mr. Ngumalo. The race, the presidential race, will also produce members of Congress and also will produce, members of Senate. So it's not like having President Trump there on his own, who might actually have that huge policy shift purely because they are going to be those two other houses, the checks and balances in place. But yes, in terms of policy, we do know President Trump to be what one would call an isolationist, in that he wants to he wants to make America great again by actually bringing in the jobs back into the US and really making sure that countries foot their own bill in NATO, and the North Atlantic Trade Treaty Agreement as well is also going to come into complete disarray. So there is quite a number of things that we are going to look at. It's quite interesting that policies will change, and if Trump comes back better, we are mostly likely to see those treaties being moved. And domestically, quite a number of treaties are also going to move as well, in terms of the stringent nature of President Trump. During AGOA, we saw that we lost AGOA when Trump was president, purely because he was more stringent on the regulations there and the criteria. So we are going to see those things happen, and also in terms of the development assistance as well. So there's quite a number of things that are going to change, given the juxtaposed views between President Trump and President Biden in terms of how they view and see the world. And we might see one of the major issues that might actually also come into play in the US market and for the population basically is the issue of Medicare, because President Trump really wanted to do away with Medicare under the guise that he was going to come back with something better. And we saw that President Biden really wanted to maintain that. So we are going to see those quite interesting policy dynamics come into play, Mr. Nguyen.
Very, very interesting, and hopefully we will have enough time to just, look into the geopolitical implications that this thing will have, because we do know that President Joe Biden was pretty enthusiastic about supporting Israel as well as Ukraine and maintaining alliances, as well as, countering China's influence. But I want us to stick to what you were talking about domestically, the sectoral implications. Are there specific sectors or industries that are likely to be more affected by this political transition, and why?
No, if we look at President Trump's proposal, because right now the Democrats, we don't know what the proposal is and we don't know what's going to happen there. So if we look at President Trump's proposal, is actually, and the way he's polling right now in the polls, it shows that, for example, black jobs in terms of your construction, those low-end jobs, because of his stance on the migration policies, those ones tend to benefit, and they did benefit under Trump. So we might see that happening. We might see a return of manufacturing into the US, because when you look at the arrangement of production across the globe, there is quite a number of specializations happening abroad, such that when a product is finally completed or assembled in the US, it would be a product that has components from China, components from South Korea, components from Taiwan, and components from the EU. So what President Trump has actually always advocated for is bringing all that manufacturing process back into the country. So that's what we're going to see. But also, President Trump bodes well for the tech sector. If you recall very well, it was under his watch that there was this huge embargo on Huawei. So that actually protected the American tech sector. even though it was under the guise of national security. So for me, those would be the two major sectors that one would see perform better. It would be the techs, and it would also be the manufacturers, when they return back to the US. So that's also going to have multiple domino effects across the global economy because of the changes and the shifts. And then probably we will also see agriculture come out because before we've seen President Trump really pushing for subsidies and also engaging with that sector.
All right, let's see how all of that affects today's financial indices after the break. You're not going anywhere, Mr. Spear. We'll see you right after the break.
Be sure to catch Business Watch every Wednesday between 2 p.m. to 3 p.m., where we feature the latest updates on business news, market trends, and exclusive interviews with industry leaders, as well as insights on emerging small and medium enterprises in the commercial sector. Business Watch, your business leader.
Welcome back to the program. You're still watching Market View, the Monday edition. Now, for our final segment, let's dive into the latest financial indices. Joining us once again, economist Sanele Sibiya, breaking down the numbers as well as providing insights into what they mean for investors and the economy at large. Mr. Sibiya, welcome back. Let's start with the U.S. markets. Per usual, we've seen declines in major indices like the Dow Jones, the Nasdaq Composite, as well as the S&P 500. What factors are driving these changes, and how should investors interpret these movements? Should have been a rhetorical question, but let's go.
Thank you, Mr. Numado. So what we are seeing there in the US is maybe just to bring the viewer to frame on the fact that because of the time difference between East Standard Time and Central African Time, no markets haven't yet opened in the US. So that was actually what we are seeing are the numbers that were there on Friday, and what we are seeing is actually a response to the global technology crash, which actually did affect quite a number of sectors, from tech to transport to quite a number of Microsoft linked companies, because of that outage in technology. So those are the trends that we were seeing in the US at that point in time on Friday. But yeah, also coupled with the lackluster performance in quite a number of sectors. And we are hoping that's going to pick up as the week goes, as earnings come in, Mr. Nima.
Yeah, perhaps with the markets opening, considering everything that you've just highlighted with the time zone differences, how would we expect the prevailing news, the ones that we were talking about just before the ad break, to factor in there?
No, we do expect markets to respond positively to that, as it's already been indicated by the futures. If you check the futures markets, both the Nasdaq and the Dow Jones and the S&P, the S&P futures, they're all responding positively, signaling that markets in the US today might actually be on the green.
Okay, let's move on to the European markets. We've observed positive growth in indices such as the FTSE 100, the DAX, and the CAC 40. Can you provide maybe an overview of the current trends and any major events impacting these?
Thank you, Mr. Numado. So what we are seeing there is, now London is responding better purely because of the likely geopolitical tensions now that are going to come back to the fray, the China-US type of trade wars. And, the pound sterling seems to be quite a stable currency that is not influenced much by those shifts. So that's why we are seeing a bit of a green in the London area, but not gaining by much because of a negative inflation outlook, really just putting bets on interest rate cuts further along the line, not as soon as the markets expected. But you come into main Europe, if you look at the DAX and you look at the CAC, at the CAC 40. So what we are seeing there is within the Eurozone, we've seen the European Central Bank come out to say that we should expect markets to respond positive. We should expect a couple of rate cuts this year. So that scope is there, and there's a clearer policy direction in terms of the monetary policy, and that has actually boosted markets. And then also there is the Biden-Trump effect there because of the positives that one would expect to come from that in terms of how business is going to really carry on going forward.
Okay, in Asia, the indices are mixed. Notable movements, though, in the Nikkei, the Hang Seng Index and Shanghai Composite Index. What are the key factors influencing these movements, and what should investors consider in the current Asian market landscape?
Thank you. So I think with the Shanghai Composite Index, so part of it is the Biden pulling out. So that's partly due to that because, it really just amplifies the probability of Trump winning. And also we've seen the Bank of China also come out to cut interest rates unexpectedly because they were hoping that's going to drive demand and really just push growth within the Chinese market. So the market interpreted that as a rather desperate move to hit that 5% growth target, which seems to be quite an arduous market to climb. And then you look into Japan again, there is the issue of that Trump-Biden kind of friction there, but also, Japan, we've seen the yen really tumbling over the past months, and there is the pressure from the policy, the fiscal side really saying to the monetary side, you guys need to do something, give us a clearer policy direction on how we're going to prop up the yen and how we are going to stabilize the Nikkei. So that's why we are seeing those dynamics play out there. And then we're seeing the Hang Seng really just getting quite modestly. Again, it's on those positive fronts in the fact that this is a breakaway region of China, and a Biden story somehow bodes where a Trump story somehow would not affect them that much. So we are seeing those trade-offs within that region.
All right. Let's bring it closer to home. Right in South Africa, we are looking at the markets. The Johannesburg Stock Exchange All-Share Index has shown some growth. What are the driving forces behind this performance?
Thank you, Mr. Nxumalo. So what we are seeing there is the metals have actually pulled that index up purely because, we can see gold really staying on the 2,400 mark. So quite a number, we're seeing those, the miners really pulling the markets out. And also, there is a bit of optimism in terms of the growth prospects, and given the political stability that the GNU seems to be positing at the present moment. So markets still remain optimistic that Johannesburg will actually perform better throughout the year.
Okay, and how would that reflect the broader economic conditions in the region?
So there is that general stability in the region. With the exception of Mozambique, with that a bit of political tensions there. But generally, the region is pulling together, and we're seeing, markets move in a positive direction across the region. And the election story in South Africa also did influence market trends in the region, because it wasn't just a South African election, it was a regional election, given the role that South Africa plays within the region.
Makes me wonder how, the general sense of how the Eswatini Stock Exchange All-Share Index is performing. Not too sure if these are the latest numbers for the Eswatini market, but if you will, please give us the general sense of just how the ESC All-Share Index is performing and any significant trends maybe or factors at play.
Thank you, Mr. Nxumalo. Really, there is no change today. Remember, we are celebrating the late King's birthday, and it's a holiday. Markets are closed in Eswatini. So really
okay, fair enough. Let's just drive straight into commodities. Briefly, your reaction to these.
No, commodities, we've already talked about gold really just shining on that political uncertainty, the geopolitical uncertainty, and the interest rate uncertainty. So that has actually maintained the price of gold above the 2,400 mark. And we're seeing, oil losing a bit purely because
Mr. Smia, appreciate your insights. We hope that you are enjoying the holiday today wherever you are. Thank you so much for making time to have this discussion with us. And thank you to the viewers as well for tuning into Market View even on this holiday. We have come to the end of this very segment and this very episode today. Join us again tomorrow for more on Eswatini TV. Stay tuned for other programs. Goodbye.